Hi everyone, welcome to this week's edition of Bulls versus Bears. All hail Saint Jensen, the patron saint of the AI bull market. Yet we did. I didn't think he could do it, but he has done it yet again. He has concocted some form of, I think it was an AWS deal or something. Anyway, he definitely, I think, is qualified now for his second or third miracle. And can be safely canonised, as be the patron Saint Jensen. So this week we're going to cover NVIDIA earnings, and software is back, baby. We are very close to those record highs. Three numbers that mattered this week. This is a very telling stat. NVIDIA for the quarter, 59.7 billion net income. Versus all of these companies, Apple, Walmart, Coca-Cola, P&G, Pepsi, Disney, McDonald's, Costco, Nike, General Motors, Starbucks and UPS, all only, they actually are about $2 billion short or $1 billion short of NVIDIA in one quarter. And look, and Apple, the second largest company in the world, obviously now NVIDIA being the biggest, is a good 20-odd billion behind in terms of that. And investors were a little bit disappointed about 70% profit margins. SaaSpocalypse, and the question mark is massively the big point here. We're 6% from record highs. One of the best days, believe, since Liberation Day in this IGV ETF, which brings me to the next stat. ASX Tech Index. Largely tracked the IGV over many years. So in 23-24, ATEC was actually 6 percentage points better. 24-25, it was in line. 25-26, it started to break. And now we're at our widest gap. 43% the IGV is now lead. And that the point in the chart where it breaks is obviously at the bottom of the SaaSpocalypse. So SaaSpocalypse still applies for the Aussie market.
Stupid.
I did put a meme out on x.com and calling for basically the Australian investors and fund managers to grow a pair, basically. So look, in Jensen we trust. But gentlemen, welcome to the show, JT, Kai, Phil, boys. Welcome. Welcome to all the viewers and listeners. So those three stats for the week. Phil, why don't you kick off? What's most interesting to you?
Well, I think the whole that SaaSpocalypse thing has all been just bullshit. Sorry, it's just like it's actually AI actually benefits these companies. So I just can't believe whoever started it, and I still think there's room to move.
I must admit it was a massive social media blitz at the time, which I've kind of got the feeling was very AI driven.
Yeah.
But now my feed's not filled with, Claude can code everything in the world.
Everyone's losing their jobs.
You can start your own Salesforce tomorrow. So, Kai, which stat piqued your interest?
Yeah, I mean, look, this week I was actually looking a lot at uranium, right? So it's a little bit of a creeper. Basically, I was looking at the URA.
You can get to that later, Kai. You got to stick to the new program, mate.
Oh,
of
sorry.
the three stats of the week.
Oh, no.
Are you drinking? Is that a Foster's beer I saw?
Yeah, mate. I'm going to make you take off that NPC jacket.
And what's a Foster's?
Oh, no. Talking about these stats. Geez, what can you say with 60 billion rev, right? It's pretty.
It was 90 billion rev. That's net income.
Oh my goodness! What can you say against that, right? That's just staggering. A 70% margin. They're literally printing money. GPUs are worth more than gold. It's absolutely obscene. I think but I think everyone knows this, and it's when does it get resolved, right? Because at the end of the day, it's some player will come in with cheaper GPUs or a way to be as good at cheaper price.
China.
Yeah, most likely, exactly. So they're at the top of the hill, and there's no one around them. They've got free reign, and it's printing money. So
at the moment, they're looking behind them in the race and going, have I taken a wrong turn? There's no one behind me. JT, what was your favourite stat of the three?
Obviously because I didn't actually look at the slides before this, and like the 60 billion net income compared to the next 10 companies, like that is staggering. So, and I'm going to actually chat about it further down the track. But like if you look down the road, we're only about a quarter of the way in terms of what the Mag 7 are showing that on their capex bill over the next 3 years as well. So,
oh man, a little bit of a teaser there. I like it. JP's alluding to.
And Jensen will be, I know in Jensen we trust, but it could keep going for another 2-3 years.
Interestingly, their CFO called 2028 a potential, like the market was expecting 45% increase on now. She said 70% increase in revenues. So, and like she's a pretty serious woman, and it wasn't even Jensen. So he just announced like a whole thing. I mean, look, this is the thing for me. And look, and I don't want to be too negative and go into that next slide. But I think the Aussie market's got to catch up at some stage. I know the US they're the most bullish people in the world. However, I think CrowdStrike, Palo Alto, ServiceNow, and there was one other last night. Basically, days after their earnings, were up on average 17%.
Yeah.
And well, I mean, weekend. Vive was up 16. Yeah.
Yep.
So, and we're still sitting around waiting for WiseTech and the AFR to do another hatchet job on him. So, like if if WiseTech was listed in the US, they'd be like Richard who?
Yeah.
Like so. And I went and did a bit of research as well. Like, I mean, if WiseTech continues to grow at their 2 to 5 year average, they're basically the cheapest software company in these indexes. So.
I mean, it was a really good.
You'll never guess what my buy is for the week.
I mean, WiseTech, like it was a great report. Do you know what I mean? Like, because I love it when the analysts try to backfill it and they go, oh, the price has come down, X, Y, and Z. But when you look at the report, it was great. Like, they successfully implemented the E2 Open acquisition that they had.
They created 6 months or 3 months.
Yeah, it's crazy.
It's time to for adaptation and stuff. That's great, was it?
I mean, and look, and their costs were down 50% because they sacked all those people. I mean, but look, again, maybe Jensen needs to do some seminars over here in Australia, and we can probably add about 20 billion market cap to our index. But look, he is the patron saint of being bullish. He blindsided the market with that 2 million GPUs to AWS thing. The Vera Rubin and Blackwell, they're integrated with CPUs, and this is we're past the inflection point. Like it was just a litany of sound bites and like seriously just what you'd expect from the patron saint of bull market of AI bull market. So, and as JT teased before, and JT, I'll let you go through this. And this is one thing I did send you earlier. Again, I probably need to give you the slides beforehand, but maybe the surprise will make it a better content.
Hyperscaler. So I'll explain this. So we actually have a structured product at the moment, and we did a webinar on beyond data centers. Okay, and obviously I've been chatting to some people about it, and they're like, "Oh, look, that whole thing's played out," and they're worried about, it could be 2000s again, like we're near the top. And I'm just like, yeah, but you could be, and I just chatted to Mark is that if you look at what the hyperscalers are going to spend, they're only about a quarter of the way through, and this chart shows you that they've got another, they've got 600 billion odd plan for this year, but they've got another 2 trillion over the next 2 years planned, and so it's just going to be amazing. And that's why I said, Jensen's pulled out another miracle, but it could happen for the next 8 quarters, next couple of years, as he, if his net income is as big as the next 10 largest companies combined, and this shows you where the money's coming from. It could continue.
So just a quick correction for the on that. It was 12 iconic companies, not the next 10 combined.
Okay.
But I just so people we don't get misquoted.
Okay, but either way, it just shows like NVIDIA's bottom line. It's amazing how much money they're printing at the moment. As you said, their chips are worth more than gold at the moment, and just chatting to, and if anyone that's used Claude lately, you can just see that it's slowed down. Anthropic haven't got enough compute at the moment, so the demand for compute continues.
It has definitely been struggling, I've got to say. And I tried to use the mid-range because otherwise we end up blowing our entire annual AI budget in the slide. And one thing is with that beyond data centers, I mean, look, we all know, for regular watchers of the podcast, I'm only a junior. If you're not a regular, I'm only a junior developer. Kai's K.AI, as we like to call him. I essentially just interviewed him, but we're looking at that beyond data centers because a lot of it is very priced in and quite expensive. And you can almost see, despite those amazing numbers from NVIDIA, it was up 8% last night. That, and I think that's their first positive share price reaction in 5 quarters on the next day. So despite the fact that Jensen's just smashing it and he got his hype back, 8%, when you're a $5 trillion company, it was the second largest one-day market cap move in history, and it was. But when you're that big, it was 440 billion in one day. So I don't know how much of it's in. If it was, if we're talking Korea. It'd all be leveraged, but and the other one though is it's their growth, even though they're late stage. Intel's been up a couple 100%, Broadcom and AMD. They're up, and they're up more than NVIDIA this year, by quite large margin. But when you look at the bottom line. The only one that is actually, but it is a lot smaller, obviously, is Cerebras, which we will, for those of you who watch the podcast, that's one of the ones that's in our structured investment, and it's the only one that's seen a bigger surge in sales. So, AMD pretty much is second place all on its own, and it seriously is been a bit of the, the simple cousin. Intel's the simple cousin, but AMD is probably just your dumb cousin, and Jensen just keeps on keeping on. So, it was pretty huge. But what it gave was massive faith in the rest of them, and what we were trying to do in that beyond data centers webinars, try and find something that obviously is going to have that sort of scale up in share price with the revenue like NVIDIA did or like Palantir did and things like that. Because we picked 3 industries that are expecting anywhere from high 30s to 50% industry-wide growth per annum for the compounded for the next 5 years. So, and there was we looked at robotics as well. It was, which we don't have something necessarily on for this, but mainly, we did a robotic strategy last year, but also extraordinarily expensive and already sort of started to play out a little bit. But Kai, just back to the webinar. I know that you've got 90 seconds to describe your favourite bits or the favourite investments in that. I know you're a fan of GitLab.
GitLab.
but just give us the quick cliff notes or a teaser so people can go and watch the webinar.
No, I think I mean, really, the general theme is basically, look, like hyperscalers are already spending a lot of money. It can't handle all the capacity. It's not going to be the cheapest, so you need more specialized players to come in and really take the reins, right? So that's the whole point of NeoCloud, and CoreWeave and Nebius does it really well. In terms of chips, you still need to connect things. They need to be faster. We built the engine, which is NVIDIA. But really what we're doing is making things faster and more efficient. I know JT likes a Cerebras chip as well. We joke about the pizza. But this chip is seriously big. It's definitely, but it's, in terms of what it does, it's about 10 times faster than a NVIDIA GPU, right? Because they just put it all together into one silicon wafer. So that one's very interesting as well. And of course, GitLab and Palantir. I mean, everyone really understands it. It's like, well, if AI is so smart, how are we going to control it, right? Because how do we ensure that it's not going to come out and kill us out of the sandbox? How is it aligned to us and what we do? That's really what we're trying to control, and I don't think anyone has a good answer at the moment. All the CEOs are worried. I think most sensible people should be worried. And really, that's kind of part of the job of what Palantir and GitLab are trying to do, right? So Palantir is trying to get all the identity, permissioning, and stuff handled, so we can actually trust in these AI and deploy it safely. GitLab, the GitLab is a little bit more for the developers, but it's just having visibility of like, imagine all these AI agents coding itself, improving. If you can't see what it's doing, it's risky, right?
You got to keep track of it,
GitLab's
right?
just trying to have a bit more visibility. That's all.
Yeah, I mean, what if one of them writes like an evil twin? And an evil digital twin. But yeah, and look, I sort of attacked it from a bit of a different angle, and really where I started from, not so much the tech, where Kai obviously is massive expert and makes my brain hurt regularly, trying to work out what the hell he's talking about. But I just went and said, Fortune 500 companies, what's their top 5, like priorities, concerns, and basically spending for the next 5 years. And governance was massive. ServiceNow also, which was up 10% the other day. It's a deployment. It was another one that I was considering putting in that investment, and the jury's still sort of out at the minute. There's a bit of feedback. There's a few that don't really like Palantir and don't understand GitLab and blah blah blah. And obviously we've got Iron in the NeoCloud one. It was pretty split between Nebius and Iron, but Iron basically, they run on renewables, so their power advantage, it was massive, and they just delivered ahead of schedule, mind you, a massive data center to Microsoft. So instead of Microsoft going and spending $20 billion restarting a nuclear power plant with Constellation, they've got a pretty good setup with Iron in the US, which is used to be Iris Energy, it's Australian, and we're starting to kick butt a little bit in AI. There's been quite a few, like Firmus, Sharon AI, which is listed on NASDAQ, which is the best Australian name, and its ticker code is Shaz. And we, what was the other one? Matilda AI is coming as well pretty soon. Lorikeet. But I think it's starting to heat up here in Australia, and it won't get. It'll be the same. I think it'll just continue to snowball, because apparently our abundance of potential renewable energy.
Let's drop my mic.
And the fact that we're a tier 1 nation in terms of relationship with the US means that we can get the chips. Apparently we're a bit of a target, or not a target, an investment target. So you need to be careful with saying target with Trump. He'll rename Australia like South America, or South USA soon. Rightio, so what the market is missing. JT, I'm picking you out. What do you think the market is missing, my friend?
So this is off some of the podcasts I've been watching, and sort of we're going on the Beyond Data Center thematic. And this is actually about Amazon. So Amazon is actually on track next year to have more robots than human employees. Okay, so I know we might not have the robotics in the next structured product, but it just shows that there's an actual company out there that's actually ahead of the game. They're deploying AI. They're actually deploying robots, and people are asking, will this actually make money? And what the analysts have actually looked at is that Amazon's margins. So what happened was they started investing in robots back in 2018, and it's a massive capex cycle. They've also got self-driving fleets, drones. Basically they're trying to automate everything. And then what's happened over the last quarter by quarter is that their margins are actually increasing, while their top line is actually just stable as well. So it just shows that yes, this whole AI boom, this robotics boom, is actually going to be a production, sort of a productivity boom as well. And we have one of the largest companies as the whole ecosystem, as the sort of the poster child for this. So I think the market's missing that, and the people that are kind of worried that hey, we're very early into this AI. Oh, sorry. This AI thing is over. It's like, hang on, like
No.
exactly. The largest company in the world is actually, they started back in 2018 and they're just now bearing the fruits of this whole thing. So can you imagine all the other companies that are going to start playing catch up? And there's going to be other ways to innovate with this amazing technology that we all have at our fingertips now. So, it just gets me excited about the whole AI boom ahead. And I'm quite bullish about the whole thing. Yeah, of course it's going to be volatile. And we talked about the overcapitalization, in the internet boom, and people laying fiber and things like that, and whoever invested in that, did their shirt. But the technology is revolutionary. It's here, and we actually have actual real life examples where it's already been deployed and is actually producing gains. So yeah, I think the market's missing that as we head into September, October, and we're getting a little bit cautious about the frothiness of the market. And I have a funny feeling that we'll come back in a few months' time going, man, I should have just stayed long all through it.
Well, I mean, as well, that was one of the sound bites I forgot from Jensen was they're doing a big partnership with Amazon on robotics. So, although I missed that, I missed that as well. That's a pretty good headline. I don't normally, that's a very catchy one. What the market's missing, I think. Look, I guess I think they'll wake up to over the coming weeks is earnings is done, baby, and Jensen's done, and I think we've probably got maybe another week of froth sort of left in us, etc. But the stark reality of what's the market missing? Like everything else except AI, basically, which is freaking horrendous. So 30-year mortgage rates back to highs. There was defaults are up nearly 30% on mortgages in the US and year on year. And look, Iran's still happening. Straight up, just because we're not talking about it and that orange-haired buffoon still renaming bodies of water doesn't mean all this stuff's isn't going on in the background. And I'd be I think that without the distraction of earnings, I think that all of this stuff in the background is the market's been probably just putting on the back burner or ignoring, not necessarily missing it because there's still stuff out there.
It's just a version.
Kai, what do you reckon the market's missing?
Yeah, well, I was looking more at uranium, as I was saying before. In the last couple of weeks, URA's really had a decent rebound. So it's been pretty strong coming out of the lows, right? So, but there is a bit of catalyst on the board as well because basically, USA and Canada tension, that's really a big portion of it. And I was wondering, I was like, what's really causing this drive up? Obviously the general AI theme in the background that's pushing power along. But that trade dispute between US and Canada, Trump's stirring some more stuff with the what's the 51st state? What was it? The 51st state. Cameco basically they actually have the largest refinery in the world for uranium. So I didn't know that until I was looking this week. So basically that's located in Canada, right? So it's causing a bit of stir. I think it's been pretty lackluster for the last year or year and a half. But a lot of the energy agencies are saying that spot uranium price will stay up around here for sure. So a lot of the mines that were unprofitable before, are starting to become a bit more profitable. So and obviously with all the increase in energy demand that's coming along with the AI thematic, it might be a good little play.
Just to add to that, Kazatomprom, which is the Kazakhstani government, semi-government organisation, which is the biggest producer of uranium in the world, said that they publicly said that they will control supply to ensure the uranium price stays higher for for 25 years. They are sitting on some of the biggest deposits, and they know that they've pretty much got nothing else, so they need to make it work, and they need to string this out as long as they possibly can. I would expect. I mean, BHP
record highs.
Well, record highs, but largest discovered deposit of uranium in the world at Olympic Dam, right, and they spoke about it about 10 years ago, saying $80 was the trigger. Obviously, had a fair bit of inflation, so maybe it's more like $150 now. But they are the third biggest uranium producer in the world, and it's a byproduct. It's not even a frontline item. Now that they're a copper company, of course, so they may.
They can pivot quick.
They can pivot quick. They can pivot real quick. Phil, what do you reckon the market's missing?
Look, something domestically. I think people don't realise there's a good chance, small chance, a bit of a chance of a rate hike in September. Everyone's calling November. I think three of the economists, NAB, Citibank, not sure who the third one is. And that's sort of going to weigh on our stock market. So it's not so much a global thing, but more of a domestic thing. And so inflation's still here. It's not going away. And
it was 3.5?
Yeah,
3.5.
Yeah.
Trim mean was 3.8.
Yeah.
So, which is the RBA's preferred measure of inflation. Which be careful we don't mention PCE because we're contractually obliged to mention that that's the Fed's preferred inflation. Rightio, so the two dullards, me and you, we've got to explain why we were wrong last week. Kai, actually, fun. Let's try something fun. But considering Finn did yours, maybe you should have to explain why you were right.
Look,
no, you're off duties now. But look, I'm going to put up my hand. The reason I was I caught NVIDIA 1,000% wrong, and in Jensen I did not trust. And I'm paying for it. So
you got to believe. I've
got to look. You know what? It's it's the religious equivalent of purgatory.
Yeah.
So not believing, but. Hence why I've tried to make it up to the gods by sainting Jensen on this episode. Phil, why did you get it wrong?
Look, I think I underestimated the US earnings. They're going to keep going. That really sort of dragged us up. And so that was my main reason,
Yeah. Well, next week, I expect that we won't have to do that.
Yeah.
But we're back into greedy territory at 58. We were just in neutral last week. And yes, we'll. I've got to move to the new thing. So buy and avoid, JT. The feedback from everyone has been that this actually was quite popular. So we're just to explain to the audience, we just kind of try to put some rules around it in terms of we can go long term. However, you've got to have it's something in the next week. It's got to have a catalyst. So, for instance. If you wanted to do a buy last week for an NVIDIA, you could do it then, but the catalyst is earnings. But now it's probably gone, but we don't want to be, I just don't want to be tracking like 5,000 different weird ideas, especially those wild cards that could get really, really difficult. So that's how it's going to work. There's no points awarded yet. I'll come back to you on that one. JT, your buy and your avoid for this week, mate.
Can I just pat myself on the back for last week's avoid? So I said avoid PEXA, and they got dumped on earnings. But my buy for this week is just straight up SPY or XJO. I just think the market will drift higher next week. The fact that we did have a pullback on that high inflation print and now has found the floor around the 9,000 level. I think it heads back to 9,200 and then onto 9,300 over the next week or so. So XJO is my buy. My avoid is similar to PEXA last week, AFG, which is a mortgage originator.
Oh,
yeah. So basically, anything in that sector, avoid. Like the big four reported that their applications had dropped 20%. In general in mortgages. So anyone originating, they're in the same boat. So avoid that area.
Well, I mean, you can obviously avoid putting a deposit down on a unit that's coming in the future. Maybe private credit as well. I think two funds two funds of stock redemption.
That's my avoid. So.
What's your wild card, JT?
So interesting that you guys were actually chatting about uranium. My wild card is Silex Systems. So Silex are commercializing a new laser technology to enrich uranium. They've got a contract in place to build a plant in, I think, Kansas in America. So that they will have the only enrichment in America. And it hasn't bounced as much as the uranium price. It's lagging. So a bit of a catch-up trade there. So Silex Systems for me.
Nice work, mate. Kai Chen, what's your buy and your avoid for the week? And bearing in mind to the audience as well, we haven't shared these prior. So there could be some double up.
And I still got to get used to the rules because I didn't realize it was going to be such a quick turnaround in terms of we're looking for the immediate one. So these ones, the catalysts are not as strong for immediate reaction.
But like with the first week, because I think last week I gave like a broad 5-year timeline on something. So we'll let you off the hook this week. It was like but go with your buy and avoid, and we're a work in progress.
After just looking at the stocks, the one to buy, I really like Marvell, right? So it's like, I know in the webinar we didn't have enough time to really cover photonics, right? But if you look at all the photonic stock, oh my God, they've actually had a cracker. They're pretty much on par with the semiconductors, right? In fact, they are the next step to semiconductors, and the really easy way to explain it is like, we're using light to calculate as opposed to electric, right? That's all it is, and we're putting them into chips. It's like putting optic fibers into chips to.
Wow.
Yeah, so it's pretty cool. And they signed some pretty big deals as well, Marvel recently, right? So, given I think the NVIDIA's resurgence in the tech sector, I reckon it'll pitch a pretty good ride on its piggyback ride. So,
do you like is it Lumentix?
Lumentix, yeah.
That's the other one.
Yeah,
space.
What was the other one? There was like light. Oh no, light and wonder. There's a couple. Yeah, they're all to do with light or optics, right? So, it's definitely an interesting space. I'll have a look out for that space for sure. My avoid, unfortunately, is Boss Energy.
I got that as.
Really?
It's not fun.
I was going to change it.
No, God,
can't believe that. Are you stealing my thunder? It's right here for Boss as well. I hate that stock. But I'm going to change my avoid now. I've got another one. So it's all right. I'll quickly change. I'll pivot.
Oh my God, I know, they lied to us, right? Because oh mate, uranium's doing well, but Boss Energy basically revision in terms of their asset quality from the initial studies,
cost of
production as well. Hey, but maybe uranium goes expensive enough; it doesn't matter.
No.
Nah. So no, unfortunately, that's the void. And my wild card is Paladin. So following on the uranium theme.
Interesting. Yeah. Wow.
There you go. I dare say it's you, Philip, next.
Okay.
What you buy next week? I mean, look, and I will say as well, Phil wanted to do Bapcor last week, and I said, look, please, like it's week one. Can we go with something that's not reporting next week? And that potentially is going to go bankrupt. So again, like I'm going to put the dunce cap on for this week. But mind you, I also didn't want people necessarily buying it just in case because it was a bit binary. But you know what? What was it up? 70% or something? So, but so I just credit where credit's due. But I just thought it was probably not great to have out in the ether just in case.
But then Finn had Dogecoin.
He
was right.
He said he blindsided me with that one.
Yeah,
he wouldn't have been allowed Dogecoin either.
Yeah. The old guy can't do it.
So this is why I'm saying now. Don't tell me now.
Yeah.
So we'll just be surprised. So you buy it for this week.
Okay, I was a bit boring. It's PME. I still think tech sector's lagging, and I know something like widest. I think it's there's a big short seller in that, and I just think we're undervalued. And PME's pulled back from 208. It reported well, and it's back at 183 now. Yeah. It might still be on the slightly expensive, but still, I think it's one of our better SaaS companies.
As Palantir proves.
Yeah,
but if you keep getting the revenue and the contracts, are you expensive? No. But and what's your avoid?
Well, apart from I've had to pivot. I'm going to private sector credit and MAF, Moelis Australia Financial, and MA1. They actually limited some of their redemptions this week. And
another big fund's done that today. Actually, it was in the AFR.
So steer clear of that. And I actually had some money invested with them, and I got out of it. Thank God.
Yeah, lucky. Beautiful.
Put it all at Babcorp.
And what's your wild card, mate?
My wild card is it's JB Hi-Fi. It's not that great, but it's beaten down consumer sector. And it's trading in the mid 60s, 66 this morning. I just think
very nice.
Yeah, it's just it's probably not, if not the best, one of the better ones in that sector.
For sure.
Fair enough. Now buy and avoid for me. I'm going to go WiseTech as well. I think I think software is just, there's no way the Americans don't do one-day rallies like Australia does, or 3-hour rallies. What was it? CrowdStrike was up 20. I mean, all of these things like
double digits.
Double digits, like 20.
Yeah, they've rallied already 100 and something percent.
Yeah. So our software survivor strategy is absolutely killing it. Yep. And look, and WiseTech is the absolute standout laggard. And I think there's all of these shorts in this thing. You know what? If their founder's silly enough to get himself into trouble and things like that, this April will see things. Apparently there's nothing in it, but I reckon they'd be pretty frustrated after that result. I reckon there'll be some sort of announcement coming, or the shorts will have to start to peel out because I think that break between those, what was very highly correlated in the past, but zero broke up today. Yeah. It's really the last one, and I think that they're just one announcement away from busting up. So avoid is anything non-AI related. I know that's very broad, but I just think next week, like a stark image of the market map last night was tech. There's 11 sectors in the S&P. Tech was the only one that was up, and I reckon that trend is going to be incredibly prevalent next week, particularly leading into payrolls. But the glow of Jensen will last on, and I think everyone kind of piggybacks off the back of that, obviously. My wild card is, and this is definitely catalyst related. It'll be next week. I reckon Zscaler with ZS in the States is, again, I love picking a laggard, mainly because I mean reversion traded for 25 years, like me. It's just broken above the 200-day moving average. The chart looks really good. But CrowdStrike Palo Alto up about 130% since March. Zscaler's like just getting warmed up, and it has earnings next Thursday. So that's my wild card for next week. And well, here's the wild bit about it. I reckon it's up more than 30% on the day when it reports earnings. That's general advice only. Does not, for your specific circumstances, it's not a recommendation. Like, just chill out, people. But because I was wrong about iron last week, and I was wrong about a lot of things actually last week. So yeah. But the wild card is like a bit of a, and I'll throw in a spare wild card. Wise Tech to 65 by Christmas.
I hope you're right.
So just very quickly, next week, Zscaler, obviously Thursday. We got Broadcom, I believe. Lululemon, no one's going to care about that. Palo Alto on Tuesday. Viva's already reported. MongoDB, that came up in our little screeners previously. And Waypoint REIT and EVT Limited. I think you can probably take Monday off and miss those. No one cares. And payrolls on Friday is the big dog. Yep. But Jackson Hole this weekend. So it's a triple banger for the Trump stooges. So you've got stooge number one, Bessent's Treasury Secretary. He's already threatening to target the 30-year end of the yield curve. Will be followed up by Walsh being a stooge over Jackson Hole on the weekend. And then his third stooge, who he put in place at the Bureau of Labour and Statistics, will make sure that the payrolls lines up with that as well. So at this point, I think I'd be trusting the PBOC more on economic numbers than I would be the Trump administration. Or maybe North Korea. Yeah. Maybe that's what Trump's talking to him about. I don't know. Well, that's really over. Rightio, Philip, you're either going to be very happy next week, or you're going to be one further back. Yeah. But at the moment you're 3 from 5.
Yeah.
But why are you bearish next week?
Look, basically we're heading into September, and the earnings season is basically finished in America. And as Mark said earlier, we're probably going to go back to your worry about your bond yields, Iran, everything's sort of been swept on the carpet, a bit of diversion. They'll start to come back, out and. Yeah, I think, so that's just bearish,
Yep.
Am I highly convicted? No. Am I highly convicted? No.
No, yes.
It's the hardest decision of the week for
me. JT, why are you bullish?
Bullish. So I think basically the next catalyst is non-farms next week, but that's on the Friday night. So I think we'll rally into that. And as you just said, software stocks or IT stocks in America, they don't do one-day rallies. And I just think it continues into next week.
Yeah, that's a good point.
Look, I'm exactly the same. It's more the timing because payrolls is Friday.
Yeah.
I reckon Walsh is going to be just an absolute, he'll have to remove Trump's hand from his rear end. He's going to be so much of a puppet. And the whole reason he's reducing communication is because he knows that they need to hike rates, but he just can't. And he's been told he's not allowed to say it, so well, zip the lip. That rally in the software stocks, but as well, I just get the feeling that the positivity around NVIDIA, the positivity around software stocks, just got at least got a few days left. And then September comes in and probably will be the last bull you'll see from me until about mid-October. I wouldn't have thought because the stats for that midterm election thing as well are it's only 50 years that it's negative every time, but end of August to the midterm election, which is a much shorter time period than what we've been looking at before. The last 50 years, the average down is 16% and 100% of the time.
Wow.
So whereas the broader one, at least a 10% pullback, went back nearly 100 odd years. So I think this is one last little gasp effort to sucker in people to get them leveraged long.
Yeah.
KC or K.AI, what's made you bullish?
I don't have super high conviction in terms of the bull, but I just think there's nothing to stop it, right? Like, I mean, yeah, sure, there's the Iran stuff in the background, but it's like everyone's just blocking their ears, going, no, don't want to hear it.
Yeah.
It's not. Okay, well, then let's listen to Jensen. Let's listen to Tech, right? Okay.
Oh, yeah. I
That's
mean,
it.
look, everyone's going to be going home and reading the fin review over the weekend and you know, reading from the book of Jensen, you know, and working out, you know, well, where next? And obviously, oh, that's a great segue. Where next is beyond data centers. Have a look at, you know, check out our investment. I didn't actually even mean to do that. Now, but yeah, so that wraps up the show. And I didn't give my conviction very weak. I'm not overly convinced, but I think we won't. Everyone's going to be on hold until payrolls.
Yeah.
So yeah. So we got any other interesting facts? Anything else to add, gentlemen, or we we wrapped it up?
We're good.
No, silence. Dear, oh dear.
Yeah.
All right. Well, thank you, Philip. Thank
Okay.
you, Kai. Thank you, JT.
Thank you, guys.
Thank you, everyone.
And you know, I think this new format's working out pretty well. You know, Kai probably needs to take a few notes, but apart from that, we'll everyone have a great weekend, and we will catch you again next Friday.
See ya. Bye.